Hey everybody, it's hwsteele. Today is October 6, 2021. We're finally in October, and this is the first weekly video for the month of October 2021. And in this particular video, I wanted to show you something on the Dow Jones Industrial Average. So I'm going to bring up a monthly chart of the Dow Jones Industrial Average, and this is on the tradingview.com platform. And this is all of the existence of the Dow right here, from its inception in the late 1800s all the way until present day. And of course, like I said, this is the monthly chart. Now basically, let's do this here, zoom in here. Basically, the generalized pattern over a large period of time is the market moves sideways, then it will move up strongly, and then it will retrace and move sideways again, and then it will eventually move up strongly again. And it just kind of keeps doing that over and over again, or at least up until this point in time, right? So right here, we don't have any more data before this. So we have essentially our sideways movement right here, and then the market goes up, makes a peak here, and then crashes down. Very famous 1929 high there, 1932 crash there. And essentially the market goes sideways for quite a while. And we'll consider the sideways movement to be from this top up until the market has breached this all-time high again. Now that might not be the perfect definition of a sideways move, but essentially this price action was mostly sideways with a slight upward bias here toward the end. And we can see it really starts to take off here. But for all intents and purposes, we're sideways until we break above this all-time high right here. So that takes, over a couple of decades. Then we break above it, we move up strongly, and then again, we're stuck in a sideways market. There was not the huge crash like there was in 1929 here in the 60s, but there was sideways movement, and there was definitely moves, undulations and all that kind of stuff. It just didn't have the crash scenario also. So we get this point right here, and there's a couple of places where it pops out a little bit higher, but for all intents and purposes, this sideways market, which is actually much easier to define, gets broken right here in the early, or we could argue the mid 80s right there when it retraces back on, and then it just shoots up higher. But the point is, it went sideways for quite a period of time right there. And then we get a move up here, and we move up very strongly right there. For instance, the all-time high right here was a little under 400, and then the top up here was about not quite 1,100 points. So this is not even a 3 times multiplication factor between this high and subsequent sideways market, and these highs in the subsequent sideways market. But from right here, from this 1,100 approximately top all the way up here to this approximate sideways movement, which is between like 11,500 to 14,000, that's a large multiplication factor of over 10 to 1. And because we had such a huge multiplication factor, our sideways movement afterwards was cut short theoretically. So we definitely had sideways movement for quite a while, but we see here that instead of the 2.5 decades or so that we had seen before, it was cut short by about 10 years right here. Now this time, we have a large move up here, and this is a huge move as far as total points go, but as far as the multiplication factor of where the previous high level was, it's not a whole lot higher. So if we consider the high level to be at 12,000, which is kind of between these 2 points right there, we're at about a 3 times multiplication factor right there, right at this point. So we're somewhere in the neighborhood of 3 times this high level before our sideways move here, and then we moved higher. So basically what I'm saying is, when you have a huge multiplication factor like this one from the 90s, basically, your sideways move or phase of the market afterwards is going to be shortened. And if we're at a large top point right now, for all intents and purposes, we theoretically can't know exactly where we are. But the reality is, you can you can definitely do things that put the odds in a greater place for you being correct in your anticipation of what the market might do. Let's just say it that way. But anyway, the point is, if we get a top right here and then we have sideways movement for a period of time, in other words, if this point in the market right here is equivalent to this point and equivalent to, let me turn auto back on, equivalent to this point before it, in other words, if it's the beginning of the sideways phase, then I would expect the sideways phase to last much longer because we didn't have such a huge multiplication factor between this, the highs. Hopefully you understand what I'm trying to say. Now, this isn't really in any way predictive of whether there would be a crash scenario or anything like that. It's just if our sideways phase starts now, I would anticipate it to be longer because the multiplication factor or the difference between these sideways phases prices is not that great. So anyway, that just gives you a little something to think about, and I'll talk to you in next week's video. So until then, I hope everyone has an absolutely wonderful week ahead.